some Auburn people in today. Good. All right. All right. Well, Joe, let's go ahead and start to give us a market update about what's happening so everybody can kind of, talk about what you give some insight on what you're seeing.
Yeah. So first I want to talk about rates. Where are they? Crazy low. This is the lowest ever recorded in history. It's insane. I can't even believe I'm going to say this, but right now I'm doing VA loans at 2.49 no points.
Wow. 2.49.
2.49 with no points. I'm going to be refinancing my current home at 2.25.
So let me ask Joe a question. $100,000 loan, 30-year fixed at 2.49. What is the principal and interest on that?
Right, we're going 100,000.
2.49, 30-year fixed.
Okay. Calculator, 100,000. And we're going to do a 30-year at 2.49. $394 principal.
$394. So a $200,000 home is about twice that, about $750, $800, plus taxes and insurance. Great, cheaper than rent, right, Joe? No question about that.
In most areas of the country right now, it is cheaper than renting.
So remember, y'all, remember that, part of our job as realtors is to educate people who rent on the benefits of home ownership. But right now, with the rates as low as they are, it really makes sense. Okay.
Yeah. So, I mean, rates are crazy low. We're anticipating them remaining crazy low November 3rd. After November 3rd, I'll tell you, economists, they're all over the map. I don't think anybody could really say one way or another what's going to happen. Some are estimating a W-shaped recovery, some recovery. It's a 50-50 chance they're right or wrong. But it's really hard to say. Heard a lot of rumors and speculations. I have several investors that are waiting for housing people. They're liquidating their rental properties, and they're sitting on piles and piles of cash in 1031 exchanges, waiting for the foreclosures to start popping up to acquire properties. The reality is, study, and right now, Americans have more equity in their homes than they've ever had in recorded history. So 60% of all homeowners right now have 30% of equity or more, which is just unbelievable that 60% of the American population has that much equity in the current home. When you go down to it, those that are negative equity right now, less than 1%, and less than 9% have less than 10% equity. So that's a very small pocket of the population. If you look at 9% of the population, have less than 10% equity. That is very little. That is not going to be. And if you look at the demand right now, the massive amounts of foreclosures and stuff, you're just not going to see them because the demand is so high. So I am not worried about foreclosures coming into the market. It's not going to happen. Sam, I'm sure you talked about it last week, but we're back down to a 580 again. So those borrowers that couldn't previously qualify because all the COVID overlays, haven't reached back out. We can take another look. They may be able to now. 580 is back. It's got some conditions tied to it, but it can be done. The other thing, I was talking with Shep earlier, I know you guys are feeling it too, but Atlanta Metro right now for the entire MLS, we're down to a 2-month supply, which is the lowest amount of inventory we've seen since January of 18. That's just insane. Average days on market right now in Atlanta Metro is 14. 14 days on market.
14.
That's unheard of. It's crazy. It's the wild, wild west. So one of the things that I can tell you guys, if you want to continue to grow your business, and I know you're out there hunting for listings and hunting for buyers, and that's all fine and dandy. I had good advice when I was young in this career, and reach back out to your past clients especially the ones that have closed within the last 3-4 years. Let them know where rates are. That way you're not always that salesperson. You're only calling them when they're looking to sell or looking to buy. Just pick up the phone and call them and let them know rates are ultra low. It may be worth reaching out to a lender and talking to them about refinancing if they're planning on saying, or if right now they're looking at upgrading or downgrading, this may be the perfect opportunity for them because there's a lack of inventory on the market. They could sell their home at maximum value. The interest rates are ultra low. Maybe that home of their dreams that they couldn't get on the last purchase, now with low and their changes in income, they can qualify. So I would highly encourage you to reach out and not always be the salesperson looking to buy and sell a home, but just give them a call, check on them, see how they're let them know what the market is doing, what rates are doing. Be that advisor to them more than just somebody. I got muted there. I don't know.
Okay.
But yeah, I mean, if they're interested in refinancing, have them give me a buzz. I'll talk to them, tell them, you know, honestly, I'm not the kind of person. I've talked to several borrowers, and based on their situation, I just tell them right now is not the time for you to refinance. Even though you're going to save this money, if you're planning on moving in 2 years,
Right.
You're not going to recapture the expense of refinancing. I'm not going to put them in a product that's going to financially harm them. But I do have a lot of clients. I had 3 this morning that contacted me. They're currently in ARMs, or a lot of your past clients I'm personally reaching back out to. If I did the financing, I'm calling every one of them and letting them know, hey, here's where rates are. Here's how much I can save you a month. The average client, I'm saving, you know, about $100, $150 a month. For a young active duty military family, $150 a month goes a long way. I know I've been there, done that, did it for 22 years. So it can be a big deal. Any questions on the market and rates?
Any questions? Anthony, you got any questions? Can I hear you, Anthony? Want to make sure I've got this thing.
In the audio, Anthony. Here. Oh, there it goes. It connected.
Yeah, I was switching from my phone to my office computer.
Okay, cool. All right, good. I just want to make sure I could get you in here.
Yeah.
All right. Any questions for Joe? Okay. All right, excellent. Joe, I appreciate it, man.
Absolutely.
You guys keep Sam and Joe, Loan Depot. Make sure you call them to get your buyers pre-qualified.
Hey, and I'll tell you, I've had about 6 clients in the past 2 weeks. They called, they were originally pre-qualified with Navy Fed or USAA. They got a purchase contract, they turned it in, and USAA and Navy Fed rejected the purchase contract and told them that they needed to amend the contract. They need 45 days or more to close right now. And both of them are closing within 3 weeks. Fortunately, the agents reached out to me and you know, I flipped them over. I'm going to close them. I mean, I just two of them that just went in last week. I'll still close by the end of this month. So we can still do it. You know, the issue is they're at capacity. They're not hiring additional people. And that's just the way the business is. And their rates, they're adjusting their rates based on that volume. So, you know, I know when I talked to the other client, you know, USA was quoting 3 3/8, and I'm at 2.5. So
3 3/8 and 2.5. Wow.
3 3/8, and I'm at 2.5, and I'm like, huge disparity in rates, and they needed 45 days to close. So if you got clients out there actively shopping, you know, definitely have them give me a call. If nothing else, I can give them a quick quote over the phone. So love to talk to them, and I can still get them closed quick.
Okay, so you guys remember to call Joe and Sam and get a quote, at least get a quote. Just to recap what Joe said, the average homeowner has 30% equity, so they can sell. The interesting thing I thought he said, I thought I've been hearing there's going to be a lot of foreclosures. Joe said no, simply because there's a lot of equity out there and they can sell their home. They don't have to foreclose. So that's interesting, Joe. That's the first time I've heard that.
Yeah, it's completely different than the last crisis where, a large portion, when we look at 2008, because the risky lending tools that were out there allowing people to finance in closing costs and all those things that you could do before, that can't be done now.
Right.
They had stated income, stated assets, that the loan quality was very weak. Back then, if you look at 2008, about 15% of homeowners were underwater the day they purchased.
Yeah.
Whereas right now, across the entire United States.
So, okay, it looks like we're not going to see the foreclosures. Remember 2.49 on a VA though. What a great time to buy a house. So make sure you tell your buyers that. Okay. All right. So let's go. Any other questions for Joe or Sam before we move on to the meeting today?
Hey, I will throw this out. Conventional rates as low as 2.875. First time home buyer, 3% down, 2.875. Crazy. It's insane.
Excellent. Okay. Thank you, Joe. Appreciate it, man. Thank you. All right. Let's get into our program a little bit today. So we've been talking about getting the price right. And so what we're going to go over some questions that you can ask your seller. So what we teach you to go over a series of questions to get the price right. So I'm going to send you these Mike Ferry scripts after the meeting, but here's some questions you need to ask. Okay. And the reason I like to ask questions is because if you ask the right questions, they can, they can draw their own conclusions on what the price should be. And you don't necessarily have to tell them. It's better for them to draw their conclusions by the data you give them. So let's go over real quickly some questions you want to ask. When you have a listing, some questions you want to ask. Now, before you come out, you want to ask a couple questions. This is the pre-qualifying listing script that we talked about. But first of all, ask them, why are they moving? Because you need to know the motivation and how quickly they need to move, okay? So tell me again, where are you moving to? So if they're going to move to Florida, you need to know that. And then the second question, how soon do they need to be there? Okay, ask them that. Ask them, how soon do you need to be in Florida? If they need to be there in 3 months, we're going to need to price it a little bit more aggressively to get the home sold. If they need to be there in a year or 6 months to a year, we can start out a little bit higher, but we're going to need to look at bringing it down if they need to be there in 6 months. So we need to determine how soon they need to be there. That's going to help us price it also, because remember, they don't want to have 2 home mortgage payments. They don't want to, buy a house in Florida and still have a house in Columbus. Okay. So we need to ask them that. Now, here's something I think you need to ask people. You need to know what their expectations is. So you need to ask them, when I see you, how much do you want to list your home for? Okay. So a lot of times they're going to be too high. Some people are going to be a little bit more reasonable, and they're going to understand a little bit more. But you need to know kind of what their expectation is. So I like to ask them what they want to list their home for. Now, hopefully they'll ask you, I'm not sure, what do you think? That's a perfect open door for you to give them a fair price. But a lot of times they'll have an idea in their mind. I like to know what that is. And one of the things that on the script I have is, as a professional real estate, I study homes and prices every day. Therefore, I assume you'll list with me at a price that will cause your home to sell. Okay, correct? So then you want to ask them, so what price won't you go below? So we need to have some kind of range. And again, if they're too high on even the price they won't go below, that tells us we've got extra homework to do on our CMA. Okay. So also you want to ask them, how much do they owe on the property? Okay. Now let me ask you this. Why do you need to know what they owe on the property? Anybody got an answer for that? Just unmute yourself if you do.
I'm thinking so you can get an estimate of what their net profits will be after it's sold.
Exactly, I'm right. You need to be able to do that net sheet, okay? And if they say, hey, it's really none of your business, well, you just say, first of all, it's public information. We can go on the tax records and probably figure out what they owe based on their mortgage history. We have access to that. But really what you want to say is, hey, I just need to know so I can tell you what you're going to net at closing. Okay. So it's a question that we need to ask. And then, so those are the pre-qualification questions we need to ask before you go out. Okay. So next, what we're going to do is so once we get there, we want to do our CMA. Okay. And when you do the CMA, what you want to do is you want to take them through each of the listings. You want to pull out, sales in the past 6 months. Okay, so most appraisers, don't want to go back further than 6 months. So find the sales, the most comparable sales within the 6 months, and then you want to take them step by step by each of the sales. And you really want to, first of all, you want to pull out good photos so they can see how comparable the house is to theirs. Okay. But you want to go through this with them. Okay. So basically what you want to do is pull out the first sale. Okay. And take them through it. And you ask them, look, if you look at this sheet, how many bedrooms are there? Okay. 3. How many baths? 2. How much square footage? Okay. And then you say, based on these photos, is this house about the same as yours? Is it better than yours? Or is it not quite as good a condition as yours? Okay. And then when you take them through that, you say, okay, what was the sales price? And get them to say what the sales price was. What was the price per square foot? Okay. And how many days on the market was it? So you actually sit there with them and take them through that so they can see. It's got to be interactive. Okay. All right. So basically what you do is you take them through each of the 3 sales. Now you might want to pull some actives up. Why would we want to do actives too? Let me ask Jennifer that. Jennifer, why we want to do actives also? Some actives. Unmute yourself. Jennifer, can you unmute yourself? Or how about Herman? Can you unmute yourself? I can't hear
Yes,
Jennifer.
yep. In case the
Why
market
do we want to do some actives, Herman?
in case the market has adjusted,
Right?
you want to know exactly what's going on real time in the market at this time.
That's right. So you also want to know what your competition is. So if you're in Ivy Park subdivision, up on Veterans Parkway, and we've got 5 listings, we don't want to be the highest price necessarily. We want to be competitive. So we want to look at what our competition is to see what people have to choose from. So that's why we want to look at active sometimes. But what's an appraiser going to use? Jennifer, appraiser is going to use sales, right?
Yeah, the closed sales.
The closed sales. But I like to do both. I like to do actives too, just to know what the competition is. So let me ask you, Jennifer, while I have you, when you're doing a market analysis, what kind of information do you like to present?
I like to present homes that currently sold within the last 6 months and how many days on the market. Of course, it's what it sold for. And actually, I'm in the process of doing one now. So.
So what are you what subdivision is it?
I didn't realize it had a subdivision, but it's over in let's see, one moment.
Is it Alabama?
No, it's in Georgia.
Georgia? Okay.
It's in Georgia. Yeah.
Is it hard to find comps for that one?
I will say this. I'm a little timid by doing CMAs. Anthony, I know you're over there going like, Jennifer, you think this thing too much, but I'm just, really practicing it a little bit more and getting more confident in what I'm doing. So
it takes practice. It takes study. Anthony, you got any? I know we run into this a lot. It takes a lot of skill to be a good at CMAs. What advice do you have?
Well, my advice is this, guys. Sometimes we put a little too much pressure on ourselves with these CMAs. Jennifer being one of those people, but realistically, it kind of comes with confidence. And the reason why I say that is because you could take Alex, Shep, and myself, and we all go out to a house, and my price may be different from Shep's, and Shep's price may be different from Alex, but who's wrong?
Yeah. That's true.
Nobody's really wrong. You know, it just, as long as you get the information to support what price you're giving, usually you know, we get so caught up in, am I going to get the price right?
Right.
And we put too much pressure on ourselves. But if I had a house and I said, okay, it's worth 200, and Shep says it's 215, and Alex says it's 199, then we all could possibly be right. So just relax. Don't put so much pressure on yourself, but make sure that you just gather good information, and the facts are the facts. So as long as you pull the most recent sales that you can, and it supports the price that you're giving, then you should be fine. But for me, and this is just for me, Shep, I never give a pinpoint number. Like I never go in and say this house is 200,000.
No.
I always give a price range. I'll say, like, it could be, you could list it between 200 and 210, and I allow the seller to pick the price. Think of it like this. I'm sure some of you guys have kids. So if you take your kid to the store and they say that they want some candy, and you say, okay, you could choose from this, this, and this, and they pick something. Well, my question is, who determined what they picked? Was it the kid or was it you?
Yeah.
And it was actually you. You set the options, and you gave them the ability to pick. So it makes them feel like they were the ones who set the price. And that's why I do that, because I don't want to go in and say, hey, it's going to sell for 200, and it doesn't. And they're looking at me like, well, you told me 200. But if I say between 200 and 210, and they say, okay, let's go at 205, great.
Yeah. I agree. You want to give a range. And based on the data you pull, right? Based on the sales you pull, you want to give a range.
Absolutely.
So let me ask you this, Anthony. What do you do when they want to come in at 220 and you said 200 to 210? How do you handle that situation?
I'll do it one of two ways. I'll either, one, say fair market value is between 200 and 210.
Yeah.
You do understand that 220 is outside of fair market value. And I'll reiterate that. Or I'll say, we're 200 and 210, you're outside of fair market value. We could try it your way for 30 days.
Yeah.
And after those 30 days, let's try it my way. And then I'll take it a step further and I'll say, okay, go ahead and sign this price reduction today. So then in 30 days, I don't have to come back out.
I agree. Yeah. So if they really think it's that high, I think Anthony's right. We try it. And, you know, actually in this market, we've seen people pay over appraisal with the market we're in right now. So I think that's the right call. But I think you take the listing because what? We have a shortage of listings right now. Listings are premium and they're probably going to sell. And like Anthony said, you can start out high and they're probably going to come down lower. So you don't want to just say, no, don't walk away and say, I don't want it. But I believe you take it at a little bit higher range. But you do discuss with them that your analysis says 200 to 210. And after 30 days, if we're not there, we need to look at bringing it down or go ahead and sign it. Like Anthony said, let's bring it down. But you don't want, I don't think you want to pass on the listing, Anthony, right now, do you?
Right, I don't. And unless Shep, it's just way overpriced. Like
250.
if we're thinking 200 to 210 and they're saying, oh, I think 265, I'm like, no, that's
No, right, 265, right. That's too much. So there is a limit. There is a limit, correct?
yeah.
Yeah, okay.
And let me add this to Shep in regards to the CMA and what I feel like where I've been having the being timid and not
Yeah.
that confident I need because I wasn't taking the time to learn my material, meaning that I would pull the comps, be confident in that, but
Yeah,
I didn't take the time to actually go back and review what I pulled and actually make the comparison. I felt that I was doing it correctly, but when it was time for me to present to my client,
yeah.
I really didn't know what I was doing.
But now but now you're spending more time studying the information, so you really understand it, right?
Yeah, so the data that I was pulling, let me clarify what I'm saying. The data that I was pulling was correct, but I gathered all this information and I'm out the door, but I haven't taken the time to really understood what I was actually doing.
Exactly.
So now I'm doing that, and that has definitely increased my confidence level.
So you're spending what, an hour on the CMA, 2 hours sometimes studying the material?
To really know what I'm doing, know what I'm talking about, because I don't want
agree.
to on my client, they asking me questions and I'm fumbling through the pages trying to find the answer to it, or haven't even looked at my material. So that's
So
what
you're just really taking time to absorb the information, understand the information.
and to really understand what I was talking about in the data that I pulled.
Yeah. I like it. So you're just preparing better for your CMA, and that's key. You've got to spend time absorbing, studying, understanding the information to really be able to present it, in an effective way and a confident way, right?
Right.
Yeah.
Right.
Okay, good. All right. I see Jackie's on the line. Jackie, we've made a transition, some transition from you being more of a buyer's agent to getting more listings. Tell us some things you've learned on the CMA. Jackie, are you there?
Yeah.
Give us, I mean, you've been working on getting more listings and gotten better at it. Tell us some things you've learned the past year or two here.
Be honest with the seller.
Okay.
Don't be afraid to lose the listing, because you want at the end of the day to have that range that you're giving them. Try not to give an exact price, give a range, let them choose, but stick to your guns. If you're comfortable with the price that you're giving, excuse me, then go ahead and stick with that. If somebody else may come in and do it higher and get it sold,
okay,
step out there and you let them push you beyond, excuse me, what you're comfortable with doing.
Yeah.
Then I just think that you put yourself in a nervous position to where you're stressed to your life.
What if they want to go slight? Let's say you give a range of 210 or 200 to 210, like Anthony said, and they want to go 220, Jackie. What would you, how do you handle that? What do you say?
I use the same thing that Anthony said. We'll try it for 30 days.
Okay.
But I'm agreeing to your terms. I want you to agree to mine that after 30 days, if we don't have offers and showings, we will automatically drop it.
Very good. I think that's the best policy.
I also tell them I'm not in the business of storing my sign in your yard.
I like that. Okay. I like that. So, yes, Anthony.
Tell a quick story of an agent here, and Jennifer's probably already heard it before, but there was a popular agent here in Columbus, and he had a property listed, and the seller was quite upset. So she came into the office and she basically got with the broker and said, your agent is not selling my house. So the agent comes into the meeting and he says, what's the issue? She said, you haven't sold my house. And his response was, what do you mean? And she said, you haven't sold my house. I've had the property with you and you haven't sold it. He said, sell it? I thought you wanted me to just list it. I didn't know you wanted me to, I didn't know you wanted me to sell it, because if you wanted me to sell it, you would have listed it at the price that I told you.
Right,
So I
right.
thought you just wanted me to list it.
Yeah,
And I thought that was pretty funny.
good answer. Good answer. Jackie, while I have you online, tell me how you prepare for your CMA and what are you looking for on a CMA?
What I started doing now is having the showing pictures to the owners.
Okay.
And I'm sorry, this peanut went down the wrong,
Okay.
but I started showing pictures of the other properties. I just did this the other day.
Yeah.
And the seller wanted to know if I could push the price a little bit. And I said, okay, let me show you a picture of a house that's just sold at this high end. And it is, it's been updated.
Yeah.
You're willing to push yours to that condition, I can't really justify putting the price up to that condition.
Mm-hmm.
Gave them some suggestions on these days. Many of the major improvements like flooring and countertops, I'm not having them to do them right now. I just sold one where the countertops were from 1999, hunter green, totally ugly.
Yeah.
But we went and got some chips of Formica and basically put them on the counter with a sign that says, "You choose your counter," which got the buyer excited. It sold in it had multiple offers in less than a day.
Okay.
With the ugly green countertops, because I don't want the seller to really come out of their pocket too much up front.
Okay.
So with that being said, when it comes to pricing, I can't make yours this price if it's not looking like this price.
So you're getting nice color photos off of the MLS and showing them those nice color photos so they can actually understand the condition of what they're seeing, correct?
That is correct.
That's right. So remember, when you're doing your CMAs, push the photo button, print those photos in color. Don't just show them the first page, show them the pictures of the house, and that way they'll understand condition, and they'll immediately recognize whether their house is inferior, equal, or superior to the house that you're showing. And that's what I had suggested earlier. Pull those color photos off of the MLS and have them, ask them, hey, would you say your house is equal to this, better than this, or not as good as this? And again, that will help them draw the right conclusions. Okay, so I love I think you bring out color photos with your MLS sheets. Okay, so that's perfect. So anyway, so again, if you take them through the CMA, and then you ask them based on this information, what do you think we should sell it at? And if you really do a good job on the CMA, their conclusions should be basically in the range that you've come up with. Okay, if you really take them step by step on those MLS photos. So that's some of the stuff we do. Remember, our goal as a company is to be a listing company, which means there are three things you've got to do. You've got to have a good listing presentation. We got to keep working on that. Like Anthony talked about a good marketing plan a couple weeks ago. You've got to have a good marketing plan, and then you've got to be able to do a good CMA. Okay, so there are three things that you have to do. Okay, and because we want all y'all to have at least 5 listings at all times. Why is that? If you have 5 listings at all times, you'll go to closing at least once or twice every month, especially in this market. Okay, so it's just we really want y'all to focus on being good listing agents. All right, so that's kind of why we keep talking about this, because it's going to make your job so much easier. And that 1 or 2 sales does not include the buyers you're going to get off those listings. One of the best ways to get buyers is for a sign call on your listings. And they'll call on your sign. and they'll maybe want to see the house. And if this house doesn't work, you can find them something else. So some of the best advertising you can do is a sign in the yard for buy, and that will get you buyers also. So the whole key, one of the keys to this business is getting listings. You got to be good at it though, because like we talk about, it requires a lot more confidence and a lot more, you know, it's not that hard to show a house, but it requires some real expertise to get a house listed and sold, but that's where you want to be. Okay. Herman, any comments? I got you. I see you're on there. Herman, we've got a few listings for you.
Yeah, I agree with all that's been said. And the key for me as well is the relationship. Take time to build a relationship. And when I say that, I'm talking about trust.
Trust.
I'm talking about being the professional in the relationship. I find that all those things have helped me as well as I continue to grow.
Right. So the number one thing really is trust. Okay. They have to trust that you know what you're doing. Okay. And they've got to, and you've got to have confidence in yourself for them to trust you. Okay. So that's why we talk about spending an hour or two on the CMA so you really understand it, so that you can have that confidence, so they trust you. So trust is probably the biggest thing. And if you have a nice listing package with the CMA presentations, with the Century 21 presentations, if you have a nice marketing plan, how you're going to get it sold, like we talked about with Anthony a couple weeks ago, and you do a professional CMA where you demonstrate with competency what the value of the home is, they're going to trust you. And that's the main thing they're looking for, is trust. And you've got to be good at what you do for them to trust you. Okay, so that Herman, that was a key word right there, trust. But we have to build our skills and be good at what we do for them to trust us. Okay, so that's important. All right. Any other comments? Anthony, any comments about that?
Last thing I would just add is, if what comes with trust too is confidence, and Jennifer touched on that a little bit, but I always say, if you're not 100% sure, at least sound 200% confident.
Yeah, exactly.
Yeah.
Confidence. Yeah, that they want a confident agent. And those are skills that we develop over time. But you got to be confident, and you got to believe in yourself, believe in what you do. All right. All right. Any other comments about the CMA? Okay. Remember, I think a couple of things I brought from this. I like what Jennifer said about spending more time on the CMA so you can really understand it and articulate, and they will see that you have confidence in what you've learned. Spend an hour or two on the CMA. Okay. Like Jackie said, if they're too high, be willing to say no. If they go a little bit too high, ask for that. We'll try it your way, like Anthony said, and we'll get a 30. Let's talk about it. Bring it back down to the range that it looks the market said it is in 30 days. Okay. Those are the main things that I took from it. Okay. All right. Yvette, I see you're here. Any comments? Yvette, you've had a few listings close here lately. Yvette, can you unmute yourself?
Yes, I'm here.
Tell me what you learned on your last two listings. I know you had a listing or two sell here last year, past couple months. What did you learn?
I learned that no one transaction is ever the same.
Right.
And
That's what keeps real estate interesting, isn't it?
yes, yes. And I've learned to build more confidence with my CMAs as well.
Okay.
And since I try to make sure that when I approach them, that I have the information that they need to make a decision, I end up spending more than 2 hours on my CMAs, because I really want to know what the properties look like that I'm comparing them to. And I always add an active in there as well.
Yes.
So I spend whatever time I need to on the CMAs, even if it takes me 2 or 3 times to get it right.
So I've noticed that you spend a lot of time on your CMAs,
Yeah.
and I say at least, and that's even better, 3 or 4 hours or a couple of days on it. I find that a lot of realtors just spend 10 minutes on it. That's why I say at least an hour or two, because a lot of people spend 10, 15, 20, 30 minutes on it, which is not enough to absorb and understand the information.
Mhm.
So when I say an hour or two, I say that's a minimum. But if you can spend a couple of days on it like you do at that, that's even better, because you're gonna have even more expertise when you meet with them. I like that. Very good.
Yeah.
Very good.
Another thing that I think I mentioned, I don't know if it was last week or the week before last, but it's, even though you have a listing, it doesn't hurt to go back and do another CMA, because the market changes
Yeah.
all the time. So there was a situation where Jennifer and I had a listing, and when we initially talked to the lady, the property should have been listed at like 250, but by the time she actually got ready to list the house, I think we said something like 235 or 240, and she was like, wait a minute, you told me this price. And it was that price at the time, in that price range. But you know, when houses sell, we have to revisit the market. So it doesn't hurt to actually go back, you know, whether it's 60 days or, you know, 45 days, go back and do a brand new CMA, because you may need to readjust the price.
Right. After we list it, we need to do, what would you suggest? How often? 30, every 30, 60, every 60 days? Or
I would probably in between 45 and 60 days.
Okay.
I would just kind of go back and look back at it just to see if the house still falls in that market range.
Right. Okay. And it could have gone up in this market, actually, which is interesting. All right. Very good, Anthony. All right. Let's see. So I want to make we're going to do another live. Mike Ferry is going to do another live demonstration for Century 21 Premier Real Estate, July the 31st. That'll be a Friday. And I've got to get the time, but Ferry is going to do another thing for Century 21 Premier Real Estate with just us. So we're looking forward to that. We'll announce that, the time here soon. So keep that in mind. It's a week from Friday. And so just want to announce that. Let me see, is Alia, are you here today? Alia from 210? No, she's not. Okay. We're going to do a drawing. Let's do a drawing, Anthony, for one of those nice signs, because we want them out in the market, right?
That's right.
We want those signs in the markets.
That's
All
right.
right. So looks like we've got, let's go 1 through 20 again for one of those $100 signs.
All right.
Nice signs. Okay. So Anthony's got a number.
Yep.
And let's go. Jennifer, what you got?
Number 3.
Number 3, Yvette.
17.
17. Debbie Coolidge.
15.
15. Herman.
11.
7. Amma.
11.
No, Herman is 11. Okay, Amma, what you got?
7.
What number?
7.
7 for Amma. Okay.
Yes.
Jackie, what you got?
Well, since Jennifer took the number I've been using for the last 6 weeks,
Really?
I will do 8.
What number?
8.
Okay, Jackie's number 8.
Third.
Kendra.
4.
Kendra's number 4. Marina.
6.
Marina's 6. All right, anybody I miss? Okay, now this is for the sign. All right, Anthony, what you got? Anthony.
I quit.
What?
Play again. I
You
will
got 3.
never.
It's
Play
number
again.
3, Shep.
3. 2, 1. Jennifer.
Jennifer.
Yeah. Okay, I don't want one of the stinking signs, okay?
Okay.
I don't want to play anymore.
Jackie,
I
Jackie.
do not want to play anymore.
Jackie, we're gonna let you go first next time.
Jackie, are you
Jennifer.
serious? You've been using number
Jackie.
3?
Anthony, have I been saying 3 for the last 6 weeks?
Yes.
Probably so.
Now,
Hey, Jackie, I'll pray with you afterwards, all right?
Come on, Herman, you got it twice. I need your prayers.
Herman has won a sign. Herman has won probably about 3 times.
Yeah, Herman's got it. Okay, we got another drawing. This time we're gonna let Jackie go ahead of Jennifer. We've got Alia. You're here, right, Alia? Alia, can you hear?
He's muted.
Yeah, I'm here.
All right, you're gonna tell us a little bit about 210. We're gonna do a $20 drawing with you, right, Alia?
Sure, I'm actually gonna do, I've got a thing that I have a random generator I'm gonna put you guys in. So I'll call you after the meeting to tell you who's won. It's a $20 Amazon gift card.
Okay.
But I wanted to say hi, I'm Alia with 210 Home Warranty. I wanted to talk about our market for just a minute. I know that it is a super seller's market. And when we think about a home warranty, when we think about asking for one, we think about the seller paying for the home warranty, right? So we're thinking about something the seller's going to pay for. So if we don't want to put it in the offer, then the home warranty is not just off the table, but there's no reason to talk about it. So I want us to think of it in terms of not just protecting your buyer, but protecting you, your seller, and your brokerage, because it is a risk mitigation tool. So if we're thinking in terms of things breaking after the first month of closing, they will break either way. So we really want to be sure that our buyers have the opportunity to purchase a home warranty. And if they don't want a home warranty, that they sign something saying that they were offered one. So it's a risk mitigation tool for you. They're going to call you when their dishwasher breaks either way. Giving them the opportunity to purchase one for themselves is really the right thing to do. So the average repair or replacement in that first year is going to be $1,200 for one claim. So that $580 pays for itself. In addition, we've got a $100 cash rebate for lock and hardware changes and rekey. So I definitely want us to think about offering it to our buyer, giving them the opportunity to save that out-of-pocket money in that first year.
Right. So they do have a form that, you know, if they don't want it, they can sign it. It kind of protects you. Right. So Ali, you're going to do a draw. You're going to do a drawing and just call the winner.
Yes.
Correct?
Yeah.
Okay, excellent. Perfect. $20.
Thank you.
Okay. So y'all can still win, even though you didn't win the sign. Okay. All right. Thank you, Alia. All right, y'all. I think that's it for today. So we appreciate y'all showing up, and get out there and let's get those prices right on those listings, and let's get more of them. Okay. Thanks, everybody.
All right, bye.